Good morning. Welcome to the Economist Corporate Network's Asia Regional Strategic Forecast in Singapore at 8:30 a.m. I'm delighted to welcome all of you today. We're meeting virtually under very exceptional circumstances. Governments all across the world are pulling out all the stops to help support their economies and households as coronavirus spreads throughout the world. We've seen bailout packages. We've seen just 24 hours ago a $2.2 trillion package by the US government, including some helicopter money. And we have seen city shutdowns. We have seen healthcare systems break down. And today, what we want to discuss is what this is doing to the impact of Asia and our businesses here. I'm delighted to welcome a host of speakers from across industry to talk to us about what they're seeing from their vantage points. And to begin, we'll have Simon Baptist, who is our Global Chief Economist and Global Editorial Director for the Economist Intelligence Unit, who will share with us our perspectives on what we see the future holds for economies across the world and in Asia. He will be joined by Chung Kai Fong, Managing Director of Economic Development Board from Singapore, and he'll share with us what he has been hearing from the business community here in Singapore and the concerns that they're facing. I'll also be very delighted to then invite Ong Ai Hua, who is the Company Group Chairman of Janssen, pharmaceutical companies of Johnson & Johnson, as well as Peter Hadley, who is the President of Asia Pacific for ADP, a payroll and human capital management consulting firm. Before I invite our speakers to join us, I'd like to please invite you to join us for the conversation on Slido. This will be the platform that we are using to connect with our audiences across Singapore and further afield. If you just log on to Slido and type in the event code ECN RSF_SG, what you'll find there when you log on is that there are 5 questions waiting for you. This is the poll I've prepared to help to understand what you guys are facing as well. So please do complete that poll and we'll return to the results later. So stay tuned, participate, and you can also ask questions to us and the rest of the panelists throughout the program through the Slido platform. With that, I'd like to turn to my first guest speaker, Simon Baptist, the Global Chief Economist and Editorial Director of the Economist Intelligence Unit. Simon, tell me, what is the impact of COVID-19 doing on our economies today, across the world and in Asia?
COVID-19 is bringing us a really unprecedented economic situation. In my career in economic forecasting, I've never seen anything that has had such a fast pace of change and at such a big scale. And we've never had to put so much effort and speed into revising our economic forecasts. It's because it is so unknown. Actually, there's a lot of uncertainty around what the numbers are going to be. We have just this week done a big revision of our economic growth forecast at the EIU for 2020. Almost the whole world is going to be in recession in 2020. Overall, we have the global growth rate at a minus 2.5%. After years of being roughly positive 2.5%, so that's a big turnaround. And some economies, say such as Germany, we're expecting to shrink by 7% in 2020. So a lot of countries that have had a good economic performance for a long time now facing this unprecedented situation.
And if Corona goes away, do you think all of the growth comes back, or were there some fundamental issues that the world economy was already facing that this has just accelerated those trends?
The world economy was already looking for a slowdown this year. So we have some data here on the slides showing what our economic forecasts were for 2019, so for last year. So how were things looking just before Corona came along? This map is coloured so that the countries growing faster are coloured brighter, so in yellow, and the countries growing slower are darker. So we can see there that South Asia and Southeast Asia were amongst the fastest growing regions last year, but there were some structural trends that were having an impact. One of these was the US-China trade war. Both the US and the Chinese economies were both slowing fairly substantially. In China, there's some long-term trends that are still playing out. There's the aging of the population and the declining workforce. There's low productivity growth from the renewed emphasis on SOEs. And there's also very high debt levels, which is a drag on the Chinese economy. So that was already slowing. And now, of course, the COVID-19 has come on top of that. In the US, there was a big impact from the US-China trade war. I mean, that was also true for China. Business costs were rising because of the tariffs, and businesses were uncertain about the future investment environment and the export opportunities they might have. So business investment had been declining in the US, as well as the impact from the big fiscal stimulus in 2018 winding down. So the two biggest economies were already slowing. Now, of course, COVID-19 has made that situation even more extreme. And it's tipped over some places that were looking extremely bright, like South and Southeast Asia, into much lower growth rates.
But we've also seen complete country and some city lockdowns across much of the developed world. Really nothing we've seen before. So in the US, in Europe, they're shutting down businesses as well as any kinds of congregations that might have people involved in it. What is this doing to growth rates across, and how quickly has this moved?
I mean, there's a very difficult and complex balancing act that governments are having to manage at the moment. I mean, also monetary policymakers. And there's some very difficult short-term and long-term trade-offs, and also some trade-offs between economics and between health. And because nobody really understands the biology and the epidemiology of the coronavirus all that well yet, it's very early days, research is being done fast, and we are learning things all the time, but there's still a lot of uncertainty about exactly how it will play out. On one hand, some countries are hoping that a rapid and hard shutdown for a period of, say, 4 to 6 weeks will be enough to suppress spread of the virus and then to allow the economy to return somewhat to normal. In some ways, this is what we have seen in Singapore. Like an early and fairly stringent action now means that Singapore has one of the more open economies in the world, and one of the economies that is running closer to normal than in some other places. On the other hand, in Europe in particular, they now look like they're going to be one of the worst hit, even more badly affected than China. Europe has had some advantages, you would think. It's a rich area, and it also has a very good healthcare system, so you would think it would be well placed. But it's had a few things come along, or characteristics that have made it very vulnerable. One is it's old, so the population there has a high average age, and there's a lot of elderly who we know are more affected by the COVID-19 virus. Also, it has open borders, and so the large amounts of movement between countries, and there was not the infrastructure to control movement across land borders in particular, meant there was a fast spread. And then European governments are sort of notorious at finding it difficult to coordinate through the institutions of the EU. So you've seen different countries taking a different approach. Some, like the UK and Sweden, initially going for, well, let's let everybody get it, get some general immunity in the community, and then be more robust for the outbreaks that might come back in the future. And then contrasted with countries like Poland that were going for a very hard lockdown. So these different approaches, but in an area where there was a lot of integration, actually undermined the mutual effectiveness of their policies. So Europe is now going to the economy probably will decline by around 5% this year, and France and Germany and Italy, so three of the biggest ones, by even more than that.
And I've noticed that in the last month, we've constantly been bringing our forecast down.
Right.
I think it's the rapid rate that is unprecedented. And is it really the case that 1 month can wipe out growth rates across the world so quickly? And whether you think we can then rebound quite quickly as well from it?
I think we're not likely to see a V-shaped rebound. I think there's going to be, at best, a U shape, but we're also talking for some countries about a W and a W-shaped rebound would be if you then get a second wave of infections. And for Singapore, this is some kind of risk because the spread has been very contained in Singapore. If the virus does have further waves in the future, then of course the Singapore population is going to have less resistance to second and later waves of the virus. So the recovery is uncertain. I think it's going to be slow. The kind of growth rates we're going to see in the second quarter, some of the numbers are just incredible. I mean, in February, which is in the first quarter for China, looks like the Chinese economy had a growth rate of like minus 20% in February. So we can talk about, was it minus 19.5 or like minus 20.5? But I mean, it's just a huge number and the precision just starts to not really matter. And I think in Q2, in this next wave of impacts, so in Europe, North America, and places like Malaysia, we're going to see growth rates of things like minus 10, minus 15 in that second quarter. There should be a rebound in the last half of the year. We can see, though, the uncertainty reflected in markets. Markets just don't know how to price this. We've had a lot of gyrations, of course, more down than up, but there's huge swings day to day. Like we now wake up in the morning, we check the overnight markets in Asia, and you see plus 5, minus 5, plus 10, minus 10. It's not even a surprise that we are daily having these huge moves in both directions. And it's because markets, like the rest of us, and like policymakers, don't quite know where this is going to go. And markets are really looking at governments now. Markets are going to only calm down once they feel like governments are on top of it. And so this is why measures around resources to the healthcare system, around public information, around kind of tracing and testing are actually much more important than central bank action. Central bank action is a minimum, so yes, lower interest rates or QE, that kind of helps, but people are not going to spend and business is not going to start going back to normal until they're confident that governments have got the health situation under control. So hence, fiscal policy and government action is really the nub of this.
I want to really return to the financial risk question. I think
Right.
it's something that a lot of our members at the Economist Corporate Network are thinking about.
Right.
But before we get there, because I think I would like to broaden the conversation first before we get down a financial risk conversation,
Yeah.
to talk about the other themes that we're looking at in 2020.
Right.
Coronavirus has really dominated the headlines over the past 2 to 3 months. But before that, we were talking about a whole range of other fundamental issues facing world powers
Right.
and trade and the direction of business. So could you explain a little bit about how you're looking at the world beyond coronavirus?
Yeah, it's a great point, and there are a lot of key challenges that are still very relevant for business that while we're very focused on coronavirus now, I think we also need to remember that there are some other important themes which are going to provide opportunities but also risks that need to be prepared for. I mean, one is the US-China trade war, which sort of has been forgotten, but it's still there. Average tariffs on trade between the US and China have gone up from about 5% at the beginning of 2018 to about 20% now. So 20% tax on bilateral trade between the world's two biggest economies. That was having a big impact on supply chains, and still is, and we don't see that trade war going away. And in fact, coronavirus exacerbates it somewhat because China is now not going to be able to meet its purchase requirements under the deal that de-escalated tensions in January. They just don't need as much LNG or other US imports, for example. So that will give Donald Trump the excuse, should he want to start re-escalating if he thinks that suits his purposes in the lead up to the US presidential election.
Which I want to ask you about.
Which is the second key trend for this year, or thing to remember. It's a massive geopolitical event. The leadership of the world's superpower, the world's biggest economy, happening in November. We now essentially know that it's going to be Donald Trump versus Joe Biden. And whoever wins that is going to have a big impact on policy. They're going to have very different approaches, and this is an event that in any other year would be dominating headlines. And we have seen quite a bit of it, but firms, I think, need to pay attention to that. And the third thing I'd bring
Before
up,
we get there,
Oh, yeah.
who do you think will win the US election? Do we have a house call on that?
Yeah, it's been shifting around a little bit because things have been very volatile. I think at the moment we put the Democrats as slight favourites to win. It does depend on how Donald Trump handles this crisis. So on one hand, the US is going to have a deep recession. So Donald Trump has staked a lot of the credibility of his leadership on rising incomes, on a rising stock market, and a strong economic performance. So that narrative is going to be taken away between now and November. So the challenge for Trump is, can he deflect that onto the coronavirus and not on himself? So hence his efforts, for example, to call it a Chinese virus, right? To remind people this is not something that's come from his own actions. National crises often strengthen leaders. So in a crisis, people often look to their leader, and even if they didn't like them beforehand, kind of rally around them. So that could happen, but we know that Trump is quite volatile and can make some bad choices. So the risks of that slowdown probably put the Democrats slight favourites at the moment, but we have to see how Trump reacts.
And so your third theme was?
My third theme was slowdown in China beyond coronavirus. So those issues I mentioned, the demographics, the debt, and the productivity. China, the world's second biggest economy, hugely important for most countries. It's the first, second, or third biggest trading partner for about 80% of the world's GDP. So that Chinese slowdown is critical too. And I suppose we could throw in Brexit, which is still due to happen at the end of 2020. Now, there's a possibility that will end up being delayed because policymakers are so distracted. But the current legal situation, both in the UK and the EU, the date is the end of the year, and that was already looking difficult to achieve in a controlled way, and the risk of a hard Brexit was already high. So that's something that probably will come back on the agenda towards the end of the year.
I think for us, what I'm seeing with the Economist Corporate Network is that a lot of the trends that the businesses were already grappling with, such as digitalization of workforces or of work, of better communication across borders amongst agencies, of partnerships, strengthening external partnerships across, not just in your company, but across other supply chains, a diversification of supply chains. All of these issues were deeply pondered about, or I guess strategized in boardrooms before coronavirus. And what we've seen with this event, this singular event, is that it's accelerated that priority right to the top of the CEO agenda. And what we're seeing, as you were talking about, that some of the issues that we've faced, whether within the US-China trade war or China's debt problems, I guess the separation in US politics, where the division there is now just being exaggerated by the coronavirus crisis. And I wonder whether, as we emerge from this, what will we learn and what will we do differently in government and in business? I know in the poll questions I did ask about businesses. I want to focus to ask you on governments. What do you think governments will do differently as we emerge from COVID-19? Will they invest more in certain things, or will they have different messages for their population? How will it change governance?
I mean, there's been a huge increase effectively in the size of the state through this crisis. So we've seen in many countries the governments essentially nationalising the private healthcare system. We have seen governments semi-nationalising regulated industries like transport, for example. And we've seen citizens willing to accept a lot more surveillance and control on the part of their governments. And we've seen restrictions on civil liberties, or things like where people can go, what they can do, who they can see. And because of the severity of the corona situation, people have accepted them in this crisis, and business has accepted this sort of massive increase in government intervention. Now, a question for afterwards is, does that get wound back? And of course, it will depend a lot on the instincts that different governments have. So in many countries in the Asian region, where governments have a bit of an authoritarian bent, or would sort of like to be able to are less comfortable with giving their populations more control, probably they're not going to wind back that as much. They will take this as an opportunity to keep this level of control quite high. And so I think, for example, in Singapore, we're probably going to see a sustained increase in the level of surveillance and the level of controls on civil liberties that will persist post this situation.
I think it's more interesting to see what happened in Western societies, because I guess if you evaluate their responses so far, one thing has been they haven't been able to control behavior within society. So they've asked the French people to stay at home, but they went to the beach instead, which you will never get in some of these Asian countries. And I'm wondering whether, as we emerge from this, governments will, and people themselves too, will start to realize maybe having a rollback of some of our ideas around freedom might actually benefit the collective whole. Do you think this is likely at all, or are we going back all the way to where we were before in terms of civil liberties and the conversation around that?
I think it's unlikely to go back to where we were. And you're right that the response in many countries in the Asian region, so China's later response, but also say South Korea or Hong Kong, Taiwan or Singapore, the willingness of populations to pretty closely kind of go along, obey the government measures has certainly helped the response and limited the economic damage in these countries. I mean, at the beginning of the year, it looked like if you had an exposure to China, that was a disaster, right? So it was looking like, if we think about the developed world, countries like Australia and New Zealand were looking in trouble because they were relying on China, whereas Europe was looking much safer. Now, of course, that has flipped around, and we're still, even though we expect Australia to go into recession this year, it's going to do much better than Europe. And one reason is that exposure to China, which is our strength because China has come through this pretty quickly. In the early stages for China, the lack of open discussion and exchange of information about coronavirus did allow it to begin. So, I think if China had a higher level of civil liberties, for example, an inquisitive media, we may not have even seen coronavirus start. But once it started, then that system, it worsened in the beginning, but it did enable China to get control much quicker.
So tell me a little bit about our China forecast. Will we see a V-shaped rebound in China, as we've been hearing in the news? And what are the risks for that forecast?
Right. So at the moment, we're putting China's growth this year at 1%. A lot of uncertainty around that, actually both upside and downside. So there's a chance China could shrink. There's a chance it could end up growing maybe by up to 3% or so. But 1% is our current core forecast. First quarter was essentially normal, so sort of about 6% growth. January was roughly normal, about 6% growth. February, this -20, and March is probably going to be about -5. But there's now quite a strong rebound in China. The government is pushing people to go back to work quite quickly and pushing factories to open and for production to restart. In supply chains, people are reporting an increase in orders from China. So I do think we're going to see a big bounce back in Q2. Not the full amount, but probably a large amount of that economic activity will return. But then it will be fairly flat after that. So China's still going to have a very weak year. A rebound, but then probably a couple more quarters of weak growth after that. And the risk of a return of the virus. If China opens too quickly, and this is one of these trade-offs, the faster you reopen, you limit the economic damage, and that's the damage on people's incomes and livelihoods, which is important. But then you raise the chances perhaps of a second wave coming through if contacts then ramp up to previous levels.
Thank you. I want to return to this issue of financial crisis risk. I've heard it a lot within the network. People are worried about NPLs, insolvencies, that SMEs will go under. What is your take on financial stability risk? And are stock markets overreacting? Are they underreacting?
Yeah.
Are they reacting in the right ways?
Right. The biggest impact financial risk, I think, at the moment is around the oil market. So we've had this big collapse in the oil price, which was a combination of two kind of events which would have been negative even alone. Firstly was the collapse in demand due to coronavirus, so collapse in demand for airline fuel, collapse in demand for transport fuels on land because people are travelling less, less trade, So the oil price has crashed because of that. And that meant that the OPEC deal between Russia and Saudi and others became untenable. And so Russia kind of dropped out of that deal. And so those two factors have pushed the oil price right down. Financially, what that has meant is that countries that are reliant on oil revenue, a lot of those are headed towards potential crises. So there are some smaller economies like Gabon or Uzbekistan that I think have a very high chance of a crisis. But we're going to see other disruption as well. Nigeria has just had to abandon its currency peg, and they devalued the currency earlier this week by 15%. So those oil-exposed economies, and in the APAC region, of course, it's Malaysia and it's Indonesia, are going to face a bit more pressure as well. So that oil price dynamic is there. Governments are spending more. At the moment, markets want that. But because this recession is about confidence and demand deficiency, there's going to be low levels of activity until that confidence comes back. So if governments spend a lot, but confidence doesn't come back for a long time, we're going to see a big increase in debt levels. And then for some economies, that is then going to raise the chance of a sovereign debt crisis down the road. So governments have to spend now in order to get over it, but they need to combine that spending with an effective approach on the healthcare side.
And what do you think about the banks? Are they well capitalized? Are we at the risk of what we might have seen with the GFC?
The banking sector I have fewer worries about in general. In certain countries there are some risks, but actually we should congratulate the banking sector and the regulators, I think, because the kind of stress testing that has been going on since 2008, 2009 has put banks in a much better position than they were in before. And banks have been stress tested against declines in economic growth of around 5%, which is the order of which we're going to see through the first half of this year. So I'm feeling okay at a global level about the banking sector.
So I'm going to be bringing in Chung Kai-Fung from EDB pretty shortly. I would like you to make sure that you have filled up our poll on Slido. So if you have not done so, please do log on to Slido at the event code that you see in front of you, and we'll be able to get your views on where your business is thinking about this crisis as well. Before I get to Kai-Fung, I want to ask Simon a little bit about Singapore, so that can be a good way to bring Kai-Fung in as well. In Singapore as a city, we're pretty small. How do we compare with other cities in managing COVID so far? And what do you think the economic impact on our country is going to be, city country will be?
Singapore has managed the COVID-19 situation pretty well, and it's had a lot of advantages in doing so, as well as effective execution. So as you mentioned, if you're a small place and if you're a city, it's easier to control everything with its borders that are easy to police, so being an island, and then also a state-controlled media, so information can be controlled, and then also a population that is used to doing what the government tells it to do. So Singapore had those advantages, and it's also executed well. So when we look at the data city by city, we have here some information from Citymapper about the volume of public transport searches in different cities, and you can see how different places have had different trajectories. So Singapore's there on the right, and the bars from left to right tell you how traffic declined in the beginning of March, the second week of March, the third week and the fourth week. So you can see how sentiment in different cities has changed. In Singapore, activity levels running at about 3/4 of normal, but that's been pretty flat, right? So people have felt pretty constant in terms of their level of anxiety around the situation. And if you look at some other cities, so let's look at Madrid on the left, a huge collapse in activity. And the same in London, New York, Chicago, Paris, those big drops. They're the cities that went from complacency to panic over the course of March. And then some places like Milan were already at panic stage and have kind of stayed there in lockdown. So looking at this, Singapore has got the highest levels of residual of ongoing activity, and I think that is a sign. I mean, that tells us that people here are less worried, right? They're more confident to go about, by and large, their day-to-day business. So we've all reduced our travel by about 1/4 And so the economic impact here will be less. I mean, Singapore is going to have recession, so there's no way to avoid that. But I think the change is going to be less than in other places.
Thank you. So I'd like to take a pause now and look at our poll results. One of the poll questions that I asked you to fill up, it was, alongside keeping your employees safe and well, what are your main priorities at the moment? I wanted to see how you guys have responded to that. And I can see that maintaining productivity as much as possible is your top priority. Very Singaporean, I must say. In pivoting our product and service offering as quickly as possible to suit the current times is neck to neck with your other priority of keeping morale up in teams. On the converse side, kind of cutting discretionary costs as well as external public communications is less of a priority for you at this point in time, which is actually really good news to know that cutting discretionary costs is not top of the agenda for you. And it's the place that I'd like to bring Kai Fong from EDB into the conversation. You meet a lot of companies through the course of your work, international businesses who are headquartered in Singapore. Since the start of January, how have you been hearing what they're thinking of their priorities for the year? How has this shifted, you think? And what are your expectations for the 2020 overall?
In terms of the economy?
In terms of their expectations for investment in Singapore and what their priorities are at the moment. So CEOs, what are they keen on? What are they doing every day now?
Well, the truth is, right now, everyone's just responding to managing the COVID crisis. And of course, the first priority has to be keeping employees safe and making sure that they have all the precautionary measures in place, including safe distancing, telecommuting. So those are the things that they're focused on. Related to that would be operations which are essential. And so we've been working overtime, doubly hard with companies that are part of the essential and medical supply chain. Whether it's, given that in Singapore we do manufacture essential supplies and medical equipment for the world. Take, for example, the PCR tests, which are used by many countries to determine whether you test positive or negative for the virus, and other medical supplies as well, along with making sure that some of the essential supplies and some of the equipment that goes in all the different components continue to flow through our borders. So that's something that we have been working with our companies on. If you talk about much longer term, I would say this is the current discussions that we have been having with companies on future investments. That's sort of postponed over time because no one really has the bandwidth to look at them. But what this crisis has done is to show up the extent of how integrated our supply chains are, and also has caused companies to rethink their assumptions on supply chain resilience. So I would say the old paradigm, which is now being challenged, is you take your supply chain, put them in the lowest cost, highest productivity areas, and a lot of that would involve China and large-scale producing countries. Now that's being challenged simply because as a result of the initial phase of the virus, you get a lockdown and you have your supply chains disrupted. Now the virus has sort of migrated and the spread has become much more widespread in the developed, in EU, in UK, in the US. That's causing another shock to that supply chain. And so what happens in this whole, in Singapore, in a sense, we pride ourselves over planning for different contingencies. We try to understand our supply chain resilience and how different factors interact with each other in the region. But even this crisis has made us look and say, oh, wow, what's happening what's on paper doesn't quite translate into reality. And so one good thing out of this crisis is that we have a much better understanding now of of how our supply chains work, or what components we are dependent on and whether those components are sole source versus dual source. And it will cause a fundamental review, I think, both from our side and the government, but also with companies in terms of understanding where their supply chain networks are. If I were to, but in the medium to long term, I would say we are still looking at, we are talking to companies about investments, and we are fairly confident that we still have a role to play, simply because of the factors I said earlier, which is that companies are looking for more resilience, different sources. If you look at Singapore, very few countries in the world in a crisis, and I say this with a bit of hesitation, but if you look at many countries around, they have now imposed a lot of export controls. They have taken very nationalist positions, even within the EU, where there are supposed to be free flow of goods and people. That assumption is being challenged. Well, in Singapore, we try to, we have been honoring our word and our legal commitments, as well as we have been working with our companies to make sure that essential supplies continue to flow out of Singapore into places where it needs it. But I think we can only do that because we are, the population has confidence in us that we are managing the crisis, that we are taking care of their health. And which is why, if you look at the focus of our crisis management today, it is primarily on keeping our healthcare workers safe, making sure that the healthcare system continues to work, and slowing the import of cases into the country so that we manage to flatten the curve enough that we can manage the spread of the virus. So if we do that well, as what Simon said, start with handling the medical crisis first, and confidence will then confidence will start to rebound, and then that's where all the economic factors and financial factors will follow naturally.
I'd like to pick up on the point on supply chain.
Yep.
Singapore is certainly a hub for a lot of these logistics firms to also then ship things around the region. A lot of our corporate network members are headquartered for their Asia operations in Singapore,
Yep.
And they manage that region from here. What are you seeing happening on the supply chain side that is interesting? So, before COVID-19, I think there was a lot of discussion about de-risking from China, looking at Vietnam, looking at Bangladesh, and there was also some talk about Industry 4.0 having a play here, where some operations can be moved towards countries like Korea or Taiwan to take advantage of their high tech systems to do robotics and so on. Has all of this changed since COVID-19? Has there been any variation, or are you seeing accelerations of trends? How are you looking at supply chains?
Well, it's too early to say, but clearly this was a trend that preceded the virus, preceded COVID, in that companies are looking to diversify their supply chains. To be honest, it is not so straightforward and easy. If you have visited factories in Shenzhen, whether it's your Foxconn factory or your Huawei factories, these are large scale, and they are not just large in scale, but they are also one of the amongst the most sophisticated factories in the world. And the World Economic Forum did a study, right, and highlighted 15 lighthouse factories which adopted Industry 4.0, and many of them are in China. A couple of them are in Singapore, so we do have some capabilities. But the truth is, it is very difficult to replicate the scale and the sophistication of manufacturing. That said, I would say that with this, with the COVID-19, I would say the aftermath of that would involve companies taking a real hard look at supply chains up to the component level to figure out how to be much more resilient. And I suspect a lot of it will have to, they will have to re-examine the previous assumptions of concentrating it in one source, of looking at just low cost alone, and they have to factor in even the quality of governance and the freeness of trade in various scenarios. And that's where I hope Singapore would be able to be competitive, because we respect the rule of law and we make sure that our borders remain open and free.
One common, I guess I wouldn't say complaint, but for lack of a better word, of Singapore's workforce in this Industry 4.0 world is on skills gaps.
Yep.
And I think we can really improve on that to attract the right investment that can be the even the guinea pig or the scientist lab for these new innovations that can be pushed out to Asia. So developed in Asia, made in Asia, and pushed out to the rest of Asia.
Oh, certainly.
What is your thinking around building up that skills gaps for Singapore, and where do you see them yourself?
Well, we are getting better. There's always going to be a skills gap. In fact, it's not just a skills gap, but a lack of workers that are trained. And so that's why we've been stepping up our efforts on worker upgrading, upskilling. In fact, my organization has been leading an effort it started with what we call the Smart Industry Readiness Index, where we worked with a couple of multinationals as well as small and medium enterprise to do a stock take evaluated on an index of 16 different dimensions to understand how ready your factory is for Industry 4.0. And that not just looks at the technology, but looks at the workers, looks at the decision rights, looks at the organization of the factory. And then we have taken it to the next step now, because through these measures, we are looking at roadmaps to help both factories upgrade along the way, working with your integrators like Yokogawas, your Honeywells, your Emersons, and companies to work with those factories, but also working with our training institutes to make sure that our workers have a similar skills roadmap to do that. And if we are able to do that comprehensively, then I think that's a nice plan which other areas and other countries can also work with us on. And I think this whole trend here has also, what we are seeing in the virus has also accelerated the movement towards using much more automation and technology to make sure factories continue to run. And I think Singapore here has an advantage in a couple of areas. One, we respect the rule of law, we respect intellectual property, and we use technology. And if it becomes much more of a capital game, I think Singapore's able to play in this game.
Very, very, very good. I'd like to return to the results of one of our other poll questions about what you expect your business to do differently as a result of COVID-19. This is the question around how would business change as a result of it. And we have options such as reorganization and diversify your supply chain towards encourage flexible working. And I think it's interesting because we at the top level, even at EIU and in many other organizations, identify reorganization and supply chain as one of the main things that we've done differently. But actually that is just the second lowest priority at the moment, they think. In fact, encouraging flexible working arrangements more is what they expect their businesses to do very differently as we emerge from COVID-19. Travel less and do web conferences instead, such as this one, is very much what they expect to do differently. They expect that they will invest more in BCP, they will invest more in technology, and then it comes to they will reorganize and diversify supply chains. It does seem a bit of picking the low-hanging fruit fast and then moving towards reorganizing your supply chain.
I wouldn't change a thing for that, because the supply chain supply chains don't change overnight. Even when you talk about the shift in, let's say, production towards Southeast Asia, the truth is a lot of the shift in production before the virus was due to the uptake of unused capacity. And because supply chains take 3 to 5 years to plan, and if you're talking about the scale and sophistication of it, it is not so easy to just press a button overnight and switch production. Even today, when we are looking at a global shortage of ventilators, it is not so easy to say, can I turn on a factory to build ventilators, even though some of the factories may have some of the machines available. So it will take time. And so I completely appreciate why it's further down the list right now. Can I just say that on flexible working and remote working, that's really an important trend. And it's something that all of us should do much more of. I think because we have been complacent over time, we have not really embraced what it means to work from home, what it means to be remote. And I've been talking to quite a few companies that have started out life as a remote company to begin with. So for example, Automatic, the people that run WordPress, Matt Mullenweg, the CEO, is an advocate of remote work. In fact, he runs, if I'm not wrong, 1,000 over strong workforce, completely remote. He recently bought Tumblr, so Tumblr is an office, but everyone else operates remotely. And to operate remotely requires, it's not just a question of having a policy where everyone just works from home, but there are certain practices which are actually very applicable even if when the crisis is past and we have offices to go back to. Simple things like asynchronous way of working, right? Asynchronous communication. Because often when you're in your office, people have no qualms about just opening the door and knocking on your door and saying, hey, I need some help on this. And that interrupts the flow of thought and work. So he has actually several tips which they've written on, whether it's in terms of asynchronous communication, daily check-ins. And it doesn't mean that you stay completely away from each other. In fact, for companies that are remote, they often would prioritize having maybe 3 weeks in a year, 3 to 4 weeks in a year where teams come together. And when they come together, they make it count, they make it much more intensive, and the focus on building relationships. It just requires us to completely rethink how we have been operating as an organization over the past, in the previous paradigm. And I think all of us can learn a lot from this largest work from home experiment if we are very intentional about it. Same thing for government. So that's what we've been trying to do. It's not been easy. So one thing that we have been, we've been weighing is, while we say telecommuting by default, we are also trying to put in routines now where we can routinely check in with each other, because at the end of the day, humans are social. So we are careful not to use the word social distancing now. We use the word safe distancing, because this is a safe distance, but we are being social about this.
I think we'll return to this conversation later in the program, because with Peter at ADP and with Aihua at J&J, they too are practicing much of what we're talking about, yep. So we'll return to this. We have questions coming in, sure. And a lot of the questions are around how long we think this is going to last. So I'd like to bring in Simon as well to join the conversation back. And I think this is the million-dollar question. All our growth rates and assumptions are dependent on this one, on how long it's going to play out. So I'd like to get your views, and then Kai Feng's as well, about what are the scenarios that you are planning for, we are planning for as the base case, mm-hmm. and what are the things that could potentially throw us off to a different scenario.
Right. I mean, I see 3 waves or 3 different components coming together, thinking about how long this situation will continue for. On one hand, in East Asia, we have a lot of countries that look like they're already coming through the back end of it. So I think, for example, in China, they've now passed the trough and they're on the way back up. Now at the moment, we're seeing Europe and North America heading into the trough, and then they will probably take another 3-4 months in that before they start coming out. I think they will come out slower than, say, China, Japan, and Singapore have. And then following that, I see a third kind of wave of impact. Countries like India, Indonesia, Nigeria, South Africa having an impact later on because their health systems are just going to be slower to pick it up, and they don't have the same capacity to deal with it. So when we think about the global impact, different countries are going to be at different waves. So I think this is going to be with us well into 2021. But depending on the areas where you have exposure in terms of geographies, but also then in terms of sectors, there will be a different play out. For the world, I think we're going to start seeing a global economic recovery on average probably in the 4th quarter of 2020. Still a lot of uncertainties though, so we're planning for an elongated downturn. And
this is in the short term, kind of coming out of COVID.
Right.
In the medium to longer term, assuming the dust has settled on COVID,
right.
do we see any reorganization of sort of growth rates across countries? I remember that before this began, Vietnam really the rising star, Malaysia we packaged alongside that as well, Bangladesh and Sri Lanka as the next hotspots for manufacturing. And then we said some losers across the region. Has that picture changed at all with COVID, or do we really return back to fundamental issues such as demographics and governance
Yeah.
and strength of law and systems and so on.
I do think a lot of the same trends that we were experiencing before will come back, but the COVID-19 situation has exacerbated some of these. So, for example, the deglobalization or slowbalization, as we've talked about at the Economist, supply chains were already kind of wanting to diversify a bit, move back into the home market, so get closer to where the point of consumption was. I think the nationalism and the kind of fear that this situation has encouraged about the vulnerabilities of having very long or very concentrated supply chains means a bit more will be done at home. So that's going to be a negative for the emerging world because, of course, still the money and the capital is mostly in OECD countries, and so if more of that is staying at home, it's going to make it a bit harder for places like Vietnam than it was. They'll benefit from the diversification point still, but I think we'll see more supply chains coming back home, and I think we'll see some long-term sectoral changes. So I think industries such as travel and transport are going to see a long-term and permanent decline. I don't think we're going to go back to the level of travel, both for work and for leisure, that we saw before. It will come back to a large extent, but I don't think a full way.
Like our survey is saying people are intending to travel less and teleconference more. So
Teleconference more.
very much in line with that.
On the other hand, sectors like healthcare and tech and media are all doing quite well through this crisis, and I think they will probably come out of it a bit stronger as well.
Before I ask Kai Feng for his views too, I just want to remind you that you can have questions through the Slido platform. So please do keep them coming in, and we'll address them as we go along during the program. Kai Feng, can I turn to you and ask, what are you planning for the trajectory of growth in 2020, and what are the investment opportunities?
Well, I'll just jump in on where Simon left off. And the main thing I will watch is the extent of the spread of COVID and how governments are reacting and managing it. So we saw, Simon mentioned about China rebounding. But if you look at what's happening in China, clearly the number of cases have come really down now and they are in control. And they're starting to lift the borders of Wuhan. But the fear of import of the virus is still there. And you cannot discount the possibility of a second wave, and I think the officials there are taking it really seriously. In Europe and US, right now we are right at the valley, and hopefully the healthcare system, will stabilize, and there can be confidence restored again. But it looks like it's going to be several months away. And the challenge then is also the integration of the supply chains, both in supply and in demand. And so at any one point of time, even if one region appears to be dealing well, right, the world is too interconnected and interdependent for any sort of real rebound to happen until things stabilize. That said, I will watch out for the emergence of what I would say maybe trading blocks to start. So for example, you have a group of countries that are starting to be on the recovery phase. And if they have the adequate border controls, especially to prevent import from more high-risk countries, then trading could start with those group of countries. And that's where opportunities can come.
And you think that is not from formal agreements, trade blocks? Do you think more kind of informal?
No, it will be companies making those decisions. And simply because it's a function of the health crisis in those countries. And you see, if you look at just the flow of goods today, apart from air freight, apart from sea freight, right, and land borders, there's also air freight, and a lot of it is contingent on the belly hold of passenger airplanes. It's actually in the belly hold of passenger airplanes. So, if flights are starting to get restored, I think there will be more options in terms of air freight, and then you will see more trading opportunities there. So, if I were to just jump on what Simon forecasted, I would say that if both US, EU start to recover and China remains as it is, then the likelihood of a global rebound is more necessary. Unfortunately, we don't have enough news of what's happening in Africa today, and the more even watching Indonesia and Malaysia, so we have to watch that carefully before. But in my own view, it looks like it's going to be longer than shorter. And So that's one aspect. The other aspect to look at is, I think not enough has been said, and everyone assumes that the minute you start a vaccine program, you're going to get a vaccine at the end of the day. And many companies have said vaccine is about 18 months away. I would say while we hold out that hope and we are working, even in Singapore, we are working with companies to try to develop vaccines. It is not at all certain that a vaccine will emerge. Because vaccine development takes time, and there is also some uncertainty there. And so all these medical factors and whether the emergence of effective therapeutics will come in, will play into whether countries will be able to manage the situation well. And I think if those do not come online, then you can expect a much more protracted period of slow growth.
I just want to ask, Singapore has done a fantastic job in the eyes of the world in managing this crisis. A lot of very good planning, a lot of very good execution on the work of the Singapore government. But I did want to find out your reflections as well on what you've learned from managing through this. I'm sure that we didn't get everything right, and I wanted to find out whether there will be lessons for us there as well.
Oh, plenty. In fact, I always think that we are, when people praise Singapore, we are always very cautious. We really think we are just at the beginning of the crisis and we are not out of the woods. Many things can still go wrong, so we should never listen to such praises and just focus on managing the crisis well. And there are many things that have come up that actually challenge our plans. Right, so I talked about the supply chain resilience there. Those are the things that a theoretical exercise can only do so much. It is real life that is you can say is you put your money where your mouth is, right? And so what we do is the key for us is after this whole crisis, what can we actually learn from, and we have to take the right lessons away. I think the worst thing that we can do after this crisis, even if let's say we've managed to manage the numbers and everything blows over, is to pat ourselves on the back and say, wow, good job, we did it so well, we are so smart. And that's certainly not our attitude today. So I mentioned, after this whole thing, we will definitely look at our supply chains. After this whole thing, we'll look at even how we manage pandemics like this, whether it's in terms of our stockpiles, whether it's in terms of our medical manufacturing facilities here, whether we can do better in terms of coordinating both the national response as well as the healthcare response. The good thing is we had one crisis before that called SARS, where we really learned some very difficult lessons there. Some of our friends paid the price in terms of getting infected and they passed on during SARS, and we were quite determined this time round not to repeat that. And I think by and large we've learned quite a lot of lessons on that. Again, this is going to be one lesson that many lessons to learn from, and we better just make sure we learn the right lessons.
The program is still going to continue, but we're going to take a pause. We're going to give our readers and ourselves a 3-minute break for us to reset and to also get our other speakers on stage. So before I do that, I'd like to first thank the speakers for this panel, Kai Feng, as well as Simon.
Thanks, Pam.
Simon, as a way of goodbye, because you're not joining us for the second panel, can I ask you to just quickly reflect on also what the EIU has learned from managing through and forecasting through this crisis?
I think we have had it reinforced the interconnectedness between science and economics. So you can't forecast this crisis without a good understanding of healthcare and of technology. And so we've been leaning on our colleagues who've got specialties in those areas. And I think we're also challenging ourselves to be more bold. This is unprecedented, and we're not used to forecasting such a strong event. And we've really had to work hard to kind of get ourselves to write numbers on the paper that in another situation we wouldn't quite believe. But they're happening. So that's been a mental challenge for us.
Thank you. So to all of us who are listening in, please do stay with us. We'll be back very, very shortly, between 2 to 3 minutes. And we'll be inviting the rest of the panel to join us to discuss the impact on business. See you later. Welcome back, everyone, from this very short breather. I'm delighted to welcome you to the Economist Corporate Network's Asia Regional Strategic Forecast. We've just heard from Simon Baptiste for the EIU's Global Outlook as well as Regional Outlook. And then we heard from Chung Kai-Fong from the EDB, sharing the Singapore experience and what he's seeing with the international business community here in Singapore. I'd like to invite our next group of speakers. On my right, we have Peter. Peter is the president for Asia Pacific at ADP, which is a global payroll and human capital management services firm. They have almost 2,000 employees themselves, but they also are responsible for the pay slips of over 2.5 million people around the world. I'm also delighted to be joined with Ong Ai Hua. She's the company group chairman of Janssen Pharmaceutical Company of Johnson & Johnson. And she has been with the company for 25 years now. And in her current role, she oversees all of the Asia Pacific businesses in Janssen. So before I begin the panel, I thought I would return to our poll question to begin and to see where our audiences lie as well. And the poll question on compared to 2019, do you expect your organization to increase, maintain, or decrease headcount? And in that poll, we saw that most of our companies online are expecting to maintain headcount. 40% are expecting to decrease slightly. 7% are expecting to decrease significantly, and just 3% are expecting to increase. So with that, I wanted to turn to Peter, because Peter, you have some of that data coming up from China as well. But before you comment on that, maybe could you share with us how ADP has been responding to the crisis, and then a little bit on this question on whether you agree that people will be mostly maintaining headcount across their businesses.
Yeah, thanks, Pam. So at ADP, we pay close to 3 million people in the Asia Pacific region. We actually pay around 40 million people worldwide. So what we do is very important for people's lives. I think after medical workers and essential services like food, water, and those sort of things, getting paid during situations like this is very important for people. So what we do has to continue. It does not stop, and it cannot stop. What we've been doing, I'll speak about Asia Pacific. We've moved most of our 2,000 workers now to remote working environments. We're spread across a number of different countries. That has all the logistical challenges that many of you are probably facing in your own businesses, particularly in countries like India, where the internet infrastructure is not quite as strong as it is in other countries. Internet connections, needing to organize dongles, that type of thing. So a lot of logistical work to get our operations out there and working remotely. Fortunately, we had a lot of comprehensive business continuity plans in place and tested during so-called normal times that has served us well. And I'm really pleased to report that no payrolls have been missed, no payrolls have been late. Everyone has been paid on time so far, and we've been in this situation for over 2 months now with respect to China, more recently in some other countries. But Pam, just 2 things I wanted to mention that's particularly important for us is we're moving the workforce out of our typical centres, our facilities, to remote working. The security environment is really a top of mind for us. We spend a lot of time, and we have a large global security organisation that looks after things like network security for us, data security. We handle some of the most sensitive data that any individual will have, and also physical security of our workers and our facilities and our technology is critical. So we're spending a lot of time during this crisis, monitoring our security and the security of our environments. And the other thing is legislative compliance. So I think Simon was talking earlier on about some of the aid packages that governments and so on have been offering out there to companies and to individuals. Quite a bit of that actually comes through payroll, whether it's tax concessions, whether it's social security concessions, rate changes, timing of payments when those payments are due. So just to give you a quick statistic, we've processed, in the last 3 months, we've processed over 210 legislation changes just in mainland China with respect to things that impact payroll, which is about 250% higher than the same 3 months of last year. So to those aid packages and measures that government bodies try to put in place to help companies and to help individuals, a lot of that, it doesn't just happen, it has to sort of flow through systems and so on. So we are spending a lot of time, our product experts and legislation experts, ensuring our systems are up to date and compliant with the latest changes, which is daily, sometimes hourly. We're updating our systems for that. So security and I think compliance are top of mind, along with the usual logistical operations that many people are going through at the moment with respect to taking their workers out of one environment and putting them into a remote environment.
I think we return to the productivity question on this as well later in the conversation. But before that, I'd like to bring in Ai Hua from Janssen J&J. Janssen obviously is a very critical part of the supply chain at the moment, and I wanted to find out how your company is dealing with the disruptions with COVID-19, but also your longer term plans for the year.
So I think first of all, we have to put our employees safe. Then everything else can manage in terms of disruptions. So first and foremost, we need to look at how to do different type of work arrangements from manufacturing all the way down to office type of work. So we have started that when China first had COVID-19, and now literally the entire J&J is working from home. And we also look at how we schedule and work with the government in terms of manufacturing operations in the event of lockdown. And because we're in healthcare products, we need to make sure that our medicines do not get disrupted because they are really key to the patients and to the healthcare workers. And being an essential part of the healthcare production, the governments of many worlds are very, very understanding, and we're able to work on different arrangements to bring operation back. We also look at our sourcing of APIs to ensure that the supplies come from multi-sources. Some of this work actually began before COVID-19, so I think that is a comforting position, but we don't know what this COVID-19 is going to unfold. So we are working on this very tightly and very closely, knowing that some of our operations are also in Europe and in the US, because COVID-19 is no longer just an issue in China.
I'm looking at the questions online they've received, and some of them are related to leadership and human interaction and societal relationships. I did want to get a view from our panel here, all of you, on what do you take away as leaders from this crisis? Is there any new leadership lessons you have learned? Have you been challenged in the way you've been managing teams from all across the world, working from their homes? What would you consider a successful leadership attitude at this time? If I could start first with Peter, Ai Hua, and then Tu Kai Feng.
Sure. So I agree with one of the earlier comments around checking in with your workforce, with your employees in different locations. I think that is critical. One thing we've adopted, I'm a big believer of this, that situations like this, I think the best knowledge is often local. So whether it's regional headquarters or global headquarters, not really always in the best position to be mandating how things should be done or giving advice. I think there's certainly a role for headquarter locations to play in this situation, but I think trusting leadership on the ground and letting them really assess the situation. The best laid business continuity plans always come across bumps in the road or unexpected situations that need judgment to be exercised, and I think local judgment, local exercising of decisions is really critical. So I think checking in with people, making sure that they have the support they need, that they're doing okay. It's not just about getting the work done, but making sure the individual themselves is doing okay and is mentally in a good position, but also that they're empowered to take the decisions that are needed for their own teams, for their own clients and customers, and for their own local markets.
How about you, Aihua?
Kind of agree more with what Peter has said. You know, the ground decision is very important. Johnson & Johnson being a very global company, you know, we can't roll out a global, there's a global type of communication because truly every country is at different curve of COVID-19. Where just using work from home as example, China is really going back to work, and that is on the side of the recovery and also in support of the government efforts. So communication like this has to be very much tailored to the ground. I think very importantly is during this time, how do we share, you know, lessons very actively across each of the markets. China is sharing very actively with Europe because now Europe is locked down. How do you motivate? How do you keep the energy up? What are the things to do now compared to later, and what are the lessons that China learned that they could share rapidly with Europe and US? So what we have done today is twice weekly we have this senior management call, just 30 minutes huddle, and for our CEO to stay in touch with the leaders on the ground. I think second is also about being a bit more creative, which sometimes, many a time the ideas come from the ground. J&J has a 7-minute workout app. I would encourage you to download, you know. So when you do have normal situation, we have many choices of exercises. But when you're locked down at home, and it was the case in China, there is nowhere to work out. So the 7 minutes workout was like the most popular app for everybody, and that becomes also a new way of doing exercises, and that surely after COVID-19 will become one of the ways and means of doing it. And then second thing is to use technology to stay in touch. You know, be it WeChat, be it WhatsApp. We even have, the China team even had a cooking competition over WeChat just to keep the energy up. I think keeping energy up and keeping a mindset positive is everything.
I think that's quite interesting to have a 7-minute app. I wonder if you could get all your colleagues to do it with you at the same time, virtually. So, you know, there's now cocktail hours virtually across organizations where you kind of work out 7 minutes from India all the way to the US, doing a healthy workout together.
We tried one yesterday on video. Within Singapore first, you know, in different regions of the Singapore 7-minute workout, everybody went on Zoom and did a workout together.
That's fun. Kai-Fu, if I could come to you, what do you see were the leadership attributes that were most important during managing people and businesses in this time of crisis?
Well, three things maybe in order. First thing is getting our priorities and values right. This is a real test of what you really value as a company. I know all CEOs, you will never find one CEO that will never say that people are not my priority. But the question is, does it really matter, especially in times of crisis like this, where you have to make a decision maybe between pulling your people out versus leaving them there because it's a certain mission? Those are very difficult decisions to make. And so, for example, for us, because we know that some of our officers are out there serving Singaporeans, helping them, managing the overseas Singaporean community, we made a very difficult decision to say, look, they will work together with our people on the ground to help keep Singaporeans safe. But we also have to assure them that their safety is important and their health is important. So we have to make sure that they are well taken care of, but there's also a mission to be done. And those are very difficult decisions to make. So that's the first thing. Second point then is to communicate and make sure that we have communication channels both down the line and also up the line. And it requires a fair degree of transparency. More, I would over-index on communication than not, given this time when we are all separated, all remote. But also because people need to trust that you have their interest in heart, and people need to trust that they have the full picture. So one of the dangers, especially in the crisis management, is that while the people in the planning team decide, they do not understand the operational implications on the ground. And sometimes the operational implications on the ground have to drive and shape and change some of the decisions made at the central level. So if there's no flow of communication, cutting across all the different levels, you will have a problem managing the crisis. The third thing then is just to follow up on what Peter said, we have to trust the ground, because ultimately no one knows the ground, no one knows operations better than the person executing it. And so if you don't make an extraordinary effort, and in fact you don't empower them, you're going to find that you're going to be behind the curve in many decisions.
This is definitely issues which have worked out long before the crisis. I think all of you, what you're talking about is actually company culture as well. To be able from on the ground to give feedback to top of line management is not an easy feat to achieve for a large organization. If I could turn to Peter and ask, how are you looking at it from your vantage point when you have 2,000 employees to care for? How do you get that communication lines open up to yourself?
Yeah, I mean, we use similar techniques than what's been mentioned. So WeChat, WhatsApp, we have a tool that we use internally, which also we sell. It's an engagement tool called Standout from a guy called Marcus Buckingham, whose company we acquired a few years ago. We do short calls, not every day, but every few days, to check in with leaders. But again, I think it's the communication channels are definitely critical. But not to the point, I think, where we're disrupting the flow. We have confidence in our continuity plans. We have confidence in our people. So, I don't necessarily need to know myself everything that's going on at every minute of every day in every location. I trust the leadership. I like to know the big picture to make sure that someone is bringing this all together across the region. But we check in. A lot of it's informal. I heard it mentioned earlier about people walking into each other's offices, which I'm also guilty of doing that. But now things like instant messaging and so on is pretty handy, because you can drop a message. If someone's ready to respond, they will. If not, they'll respond when they're ready, and you can keep yourself up to date. So I definitely feel like I'm up to date, Pam, with what's going on without necessarily bothering everyone and interrupting their day.
I think this is a good time to return to one of the poll questions that we asked you to fill up on, which is around productivity. So how has your productivity fared since, if you're working from home? Has it improved? Has it been the same, or has it declined? And I can see that for most, there is a slight decrease in productivity they feel. For many of them too, it's about maintaining it. For some, 16% of the people, it's about improving, and only just 3% is about declining significantly. So I think it matches the picture here. If you do have all those communication lines open, you can still remain as up to date as during a normal time. I did want to move to a different theme around bringing in Aihua, around healthcare and the need for healthcare investment at the moment. I'm sure that all around the world, scientists, as we heard before, are looking for a vaccine. And I've also heard that at a government level, we should be investing more in STEM and in science and technology, because at the moment, scientists are key to helping us get out of this crisis. As you look at this, what do you think about the trajectory of your business in the longer term as we emerge from COVID?
I think healthcare has a few fundamentals, right? One of which is the trends of aging population. Second is chronic illness, and cancer being a big piece out of that. And third is really also the awareness of the patient and the demand. So these three trends will continue. What we think is that the emphasis of public health will be higher than before. And that would also change in terms of how healthcare budgets and how healthcare policy would shape, which is actually also the right thing. And that is also on the reverse. If you look at before COVID-19, you'll find that infectious disease has fairly lower type of investments compared to oncology. We think that it has a lot more attention now, but it will probably require a lot more partnerships, because it's a high-risk investment, and it is also going to be tied a lot with government program, and that is where Johnson & Johnson, our global public health program, where we have started several years ago, work closely hand in hand with government to address the most pressing needs of the country that is underserved, and that government plays a big role in addressing such disease. So one of the programs we are having right now is multi-drug resistant tuberculosis, HIV, and they belong to infectious disease group. So as a whole, the healthcare trends, I think fundamentally are the same, but the emphasis on public health will increase. To your question about STEM, we have quite a few programs in J&J where we encourage girls and women, to go into STEM profession, because diversity of the workforce will bring about a lot more innovation. That's true to our belief. And we also know that in the area of healthcare, we want to use our science for good and for the larger good, which is to drive education into the area of science and technology, not just science, but also technology. And we have been doing this, and we will continue to do in the face of COVID-19. So it's not going to be, mount back or take a second notch down, but in fact, we're going to do even much more. And this is something that we believe will contribute to the society in the future.
Thank you.
If I can just,
yes.
maybe let me just jump in on this. We are super bullish on healthcare. We have been bullish for, I would say, a good decade or two. And we remain so with A-Star and the investments that we've been making on the R&D front, but also in working with the industry like Johnson & Johnson. Primarily because we think that we are only at the beginning of the journey, and the future looks very exciting. We started with small molecules and chemicals and all that. We've moved to biologics. There's now cell and gene therapy, and many new, and we are just on the tip of, we're just beginning the journey on genomics and unlocking the power of digital healthcare. So the healthcare industry itself has lots of legs, and I imagine with crises like this, giving salience to people's minds, it will grow. So that's one. But I would say that we have to look beyond just the pharmas and the healthcare to the wider healthcare system and public health. Those are quite important. The tendency is to focus on individual institutions. Do we have enough hospital beds and all that? Yeah. But really, you need to look at the whole ecosystem, the whole system of public health, the whole system of community health, hygiene. And if you do that, then you take a more holistic view, which means that the shift is really from healthcare to health, right? So it's not just interventions, but it's really how do I make sure that people continue to keep healthy? I have to take, maybe I would say, the old paradigm of healthcare is you come up with a disease, someone treats you. But really right now, with statistics, with genomics, with many other options available, you can take a Bayesian approach to health. In other words, you can say, look, you have a higher risk, so I'm going to treat you, preemptively treat you. And so there's a lot more potential there that we have yet to unlock.
Thank you. I'd like to also make an announcement again to ask you to log on to the Slido app to ask your questions. So please do keep them coming in. And as you do that, I'd like to call in Peter to talk about the theme of digitalization, which was mentioned a few times over the course of this morning. Where do you see the digitalizations of jobs taking place? How do you see that trends playing out? And in your own business as well, moving more digital, and the nature of people's work, the skills that they need in order to participate in this economy.
Right. No, that's a great question. I think digital has been an irresistible surge for some time now anyway, but if anything, this situation I think is going to accelerate the focus on that. So we were talking a few minutes ago about productivity. To me, cloud computing is another way of saying productivity. It's really, if you boil down what is cloud computing, it's a one to many model. So investment can be concentrated into a singular infrastructure. Knowledge and resource can be put into cloud computing, and then many users can benefit versus the traditional computing model of one-to-one, where everyone had to build, maintain, and look after their own tech and their own stuff. What I was talking about earlier with respect to all the legislative compliance changes we've been putting through, for any individual company having to do that themselves as well as manage and focus on their core business must be almost impossible at this point in time. So I think, I don't think this crisis will change the trajectory there, because I think that's been in train for some time. But I certainly think it'll increase the focus, and people will recognize the benefits of cloud computing a little more. The other thing I'd say on digital is, I just think about our own industry in doing payroll. So not that long ago, even in countries in Asia Pacific, and it still is the case in many other countries in different parts of the world, where things were not digital. So, a pay slip and a paper paycheck would be mailed to someone's house. In this environment, that could take quite some time depending on which country you're in, for the mail to arrive. Then the person would have to go to the bank, line up in a bank where you're meant to be, what was the word? Not social distancing, but
Safe distancing.
Safe distancing, thank you. Wait for the check to clear for 3 days before you can access your funds. And that's really going to be a problem for a lot of people in this environment. So today, fortunately in Asia Pacific, I think Singapore and other countries have been world leaders with respect to payment technology. But we now, as a company, as I was saying, we pay almost 3 million people in this region. We don't really print any paper paychecks anymore, almost no paper pay statements or pay advices. Everything can be accessed online through cloud computing. Money is transferred seamlessly digitally. People have instant access to their money, instant access to their information. If they need something to be changed, they can correspond with us through what we call employee self-service, an application, computer application from a mobile device. Everything is done much more quickly, which I think adds to the peace of mind of individuals, particularly in a time of heightened tensions like the COVID situation.
May I add?
Yes, of course.
Just in the last 2 months in China, teleconsultation, e-consultation has gone up because that's become the only channel, and this will stay.
Yep.
This will stay. So there will be a few things that our everyday life would change. And we are talking about China because it's a large-scale change. But I think we would also have seen the rise of e-consulting, teleconsulting in Singapore. And this has forced people who are not comfortable to be more comfortable. And by being more comfortable, you have experience and you have better trust in how this system works and what kind of disease, which stage of the consultation works better. So everybody is learning together. So that's e-consultation, but the entire healthcare system, would also change. And I'm just sharing some observations in China just because the stage has forced behaviors, right? Many provinces have started to do electronic reimbursement in a healthcare system where it's social medicine. How do you enable that when you are not there at the hospital? And that, of course, then linked to e-dispensary, in fact, linked to, of course, home care and delivery of pharmaceutical products. So this entire change will be much more accelerated, and a lot of the inertia is all human, being the patient, the consumer, and also the healthcare workers. But it has forced everybody to look at it differently.
I'm keen to find out if there are distribution aspects to this story. We wrote a really good article in The Economist talking about telehealth in China. And we were saying that one of culture is such that TCM, you need to feel the pulse, you need to look at the tongue. There was a lot of cultural barriers that prevented people from visiting online doctors as opposed to traditional doctors. But as you say, this has forced that journey along quite a bit. And we were quoting some bosses of such telehealth services who were saying that this crisis has actually moved the market for us 5 years ahead. And culture would not have changed in the 5 years if not for this crisis. But when I was reading that, I was thinking there must be someone who loses out from this market, or am I wrong? Is there a way to open up the market, as you were talking about, the ecosystem of different types of players that can participate in this new technology, that can gain access to more people to get healthcare?
I don't think if you start looking at losers, then you're not thinking ahead, right? So the fact of the healthcare system is there's a demand and a supply. Demand is going to increase, whichever part of the world, whether you're aging or you are having chronic illness. When there's a mismatch of demand and supply, particularly in China, then there must be a solution to help to match, because you can't build supply of healthcare workers overnight, and there is such a rise of demand with or without COVID. So digital has actually tried to fill this space, and that's also one of the reasons why China has taken up digital healthcare in every shape or form much faster, just because there's a mismatch. And I think with COVID-19, what he's brought about is the inertia of an individual, you know, and that is a day-to-day life, because healthcare is very important to you. You can't trust a camera, you know. But at the same time, I think the healthcare system also thinking about which stage of the diagnosis to treatment is very suited for telehealth. And which component of the job is not all end-to-end. But that itself would actually brought about a very innovative change. And that will bring in new players that also force some current players to stay relevant and to think ahead.
Yep.
I would caution against an overly simplistic view that, you know, things are, that everything is going digital. Like, you know, yes, the number of jobs we are creating, a lot of them are digital jobs, but they are not entirely jobs which only go towards computer science graduates or engineers and all that. And same for industries. Some things will go very digital, but that will change the entire supply chain and the value chain, and you will find opportunities. There will be winners and losers, but the losers are the ones who continue to hold on to the current paradigm today. Take, for example, retail. We see retail being disrupted by online e-commerce, but it hasn't stopped some of the best retailers from changing out their brick and mortar stores and using the brick and mortar stores for different kind of experience and different part of their business model. And so there will always be opportunities there, and it requires going down several levels of detail to figure out what the customers actually want and what are some of the pain points. And I think this situation has just accelerated the trend and has made remote work more likely. But it has also, I would imagine, made human connection much more important and valuable. And the question is, how do businesses adapt to that, and which part along the value chain do they invest in?
In fact, we had one question that came in to ask, is this crisis going to make us a more caring, compassionate society with this element of human connections becoming all the more important to us? As we isolate ourselves, we realize how much we require the warmth and the kindness of other people.
I took a cab here, and the cab driver, you know, I asked him, how's your business? You know, he says, bad, traffic is down 50%. And then he went on saying that, actually, you know, it made me think more about life. It made me think about, why do we need so many things, you know, and what matters most? I don't know. I mean, is it thanks to COVID that we have this conversation? But I think, you know, it does make people ponder, and because it's no longer a problem of a country, it's no longer a problem of a family, because we are so connected. You know, is this philosophical? I don't think so. I think this is just humanity and being human being. It makes us rethink what matters most.
Yes, absolutely. I just wanted to say we have about 10 minutes left on the panel. I would like to close our panel at 10:15. So if there are questions, please do keep them coming in, and I'm looking at them and congregating the themes that you are asking me about. As you do that, I'd like to turn to Peter to talk about the connect between Asia and global headquarters. Both of you represent firms that are headquartered outside of Asia, and my firm too. And what I did notice is that when the crisis was in Asia, and we were reporting back to our global headquarters, there was, of course, a great awareness of what was going on. But things really do change when it hits Western markets, and I don't think this is unique to any of our situations here. I think it's always been the case that if the global headquarters can really understand and feel the risk that's running through, the concern that's running through, they act on more decisive ways. I wanted to find out how your experience of this as your business in Asia, in China, was consumed by COVID. The reaction that you got from global headquarters, and also now constantly, how do you keep up that communication and make sure that your voice is heard? Take this experience, and if you could also project it to overall understanding of Asia's place in global headquarters. I think there's always a concern with my network, the Economist Corporate Network, that they do not get always a seat at the board at the global headquarters, and it's difficult then to explain what Asia is going through. And we are a very different market, high growth, sometimes high risks. How do we make that connection? So begin by the COVID and end up with the story.
Okay. It's a good question. So at the beginning, we certainly had a lot of offers of help, not always helpful, but a lot of offers of help, being the first part of the world where COVID had taken off. We had, I think we had good awareness. We have quite a flat structure for a 60,000 employee company, which I think was beneficial. But I think you're right, Pam, if you're implying that, until the situation arrives on your doorstep, it really is quite hard to fully appreciate, what's going on and how to deal with things. That's why I said earlier, I believe that local empowerment, local decision making is key. So we had quite a lot of support, certainly help. Again, certain parts of our company are very centralized when it comes to like infrastructure, IT infrastructure, security, and things like that. So we lent very heavily on those groups. In terms of the the executive committee of the company, they were kept well informed, but generally speaking, I would say they let us manage, and I think we did manage. And now, or not just now, but over the last 3 or 4 weeks, some of the learnings that have come out of China is a huge market and a huge opportunity for us. Asia generally is a huge opportunity for us, but as we sit here today, it's one of the smaller regions of our existing business relative to North America and even to Europe. But we were able to transfer a lot of learnings to those other markets who are in the valley right now, as was mentioned earlier, compared to where we were a month, 6 weeks ago in many of our countries. But even within Asia Pacific, things move very, very differently. It's only this week. Obviously, Prime Minister Modi has shut down the country in India. Australia is in a fairly similar situation. China and Singapore and some of our other markets, have been in this situation for a couple of months. So I think at the beginning we were a little bit inundated with offers of help until we established the communication channels, which is critical, because it can be a lot of people coming into a smaller group of people if you're not careful and not organising things. I think we got those well established. We took the help we needed, and subsequently, I guess we're in a relatively fortunate position now to be able to offer the same back to other parts of the world within our company.
Yeah, and I think that's a very important point. I think Simon and I were talking about it earlier as well, that it started in Asia, and Asia got bad quickly, but we are still going to be the region that grows in any form for 2020, and it's where the recovery is likely to happen as well. And so the connection between Asia and global headquarters is important because of that lessons that you might learn from a recovery, and maybe what not to do and what to do. And could I come to Ai Hua to ask, how has your experience been with communicating to global headquarters on the situation here?
The headquarters has been very responsive. They really from the position of support and help, not about telling you what to do. And very quickly, it was really forming right at the top, where we have our vice chair who coordinates COVID-19 right from the top with China directly. So that was like a twice weekly call. And then as the virus goes, we have more people on the call because we have more countries being involved, and now Europe is in, North America is in as well. So I think the responsiveness, the speed, the trust, the listening on the ground, what you need, and being very rapid, I think those are things that worked very, very well. And be willing to change your assumptions because things are so dynamic. So China actually led in the entire learning as we go crisis management, and that has now helped Europe and North America a lot. I think what came out, to your question about bringing this to what probably gave Asia an opportunity to stand up more, I think is resilience. Because it hit us first, we have to figure out a lot of things on our own. Our senior management does not have answers. They are there truly to help. We have to think on our feet, and we have to no recipe book. We have to think about what to do, how to do, when to do, how to keep the team motivated, how to keep the team energized, how to then switch totally to digital, which is the only engagement now. It's not even omni-channel, right? And how do you get your technology ready? How do you train team who are all working from home at the same time using digital? So I think it shows up. The resilience shows up really well, and that to me, I think maybe during average days you can talk about Asians being very strategic and tactical at the same time. Sometimes that color is not so clear, but I think this episode has brought out what it means.
Kai Feng?
One of the benefits, at least I see, from being in Singapore is that we have a network of partners like your companies, multinationals based in US and EU, but also multinationals and large Chinese companies which are based here. And so we get a nice sense of what's happening both in China as well as the EU and US. And we are able to bridge those two, because we learn a lot from how the Chinese have been handling the situation, and particularly Wuhan. And right now that China has sort of contained it, and their manufacturing capacity is slowly ramping up. Some say to about 80% capacity right now. We are actually taking advantage of some of the availability of supplies from China, and we are able to actually work with the supply chains there, both to supply Singapore, but also the region and other. And I know that they are shipping masks and other equipment to the US and Europe, and vice versa. So I've been in touch with both our counterparts in different companies which are offering tips. And often, when you deal with, let's say, Chinese companies, they write in Chinese, so you have to understand the nuances there. You deal with US and EU, right? So it's actually very rich cross-learning. So I've also been in touch with people who are at the forefront of fighting the fight in the US, and we've been exchanging data. I think the US in particular has very strong capabilities when it comes to whether it's thinking through, tests to qualify, looking at vaccine development, and the private sector, notwithstanding what happens, the private sector has a spirit of innovation, and the ability to rally and muster a group of talented people today gives me optimism and hope that somehow the situation will be managed. But the important thing is to be able to learn from each other and be open to the new ideas. So there were many learnings, and I've shared some of these learnings with my US counterparts as well in the government, and we have a free flow of exchange of information. And I think so I feel quite fortunate that in Singapore we are able to bridge those, in the sense, the gap, and hopefully we all learn from each other.
Thank you. So we are approaching the end of our broadcast. I know we have some more questions on the platform that we didn't get through to, including clarification on some of our forecast, outlook for Southeast Asia economies, and others. And we'll get those answers to you offline. So do wait for them. If you would like to send us an email as well with follow-up questions, please do, and we'll get through to them. Before we part, I would like to ask our final question for our panelists to end on a positive note, to ask them what do they think has come out positively from this crisis in just one theme. I know there are many that we've talked about here today, whether it is public healthcare funding or whether it is communicating with our colleagues. For your company and for your organizations, what do you think is the most positive thing that you are taking away from the experience of running a business through COVID-19? If I could perhaps start with Peter first.
Yeah, I'll just answer that question by saying, as a foreigner living here in Singapore, Singapore is really a great place to be. I think we already knew that, those of us who are guests in the country, but fantastic place and to be really well handled, and it's really a great peace of mind to know how well Singapore can take care of these things. So I think we probably knew those type of things, but being in this situation and seeing what's going on in other parts of the world really brings that home. So I'm very appreciative of the opportunity to be here.
As a local Singaporean, we're so delighted to have you with us, Peter. Ai Hua?
I think what came out even more is collaboration, and this collaboration is not just competing, where you compete to be the first, you compete to be the best, but really to take care of the people, collaborate to learn on what works to manage a crisis. There's really a lot of sharing of ideas, very genuinely. I think that collaboration is going to be very, even more important as we go into recovery. Second, we talk so much about digital acceleration. I think it went off a different curve now.
Kai Fung?
Well, I would just say that some people say that a crisis brings out the worst in people, but I would say the crisis actually brings out the best in our people. And you see that in every segment, and through the healthcare workers working around the clock, to the cleaners, to people who are doing contact tracing in Singapore, to businesses doing their part, helping each other. And that's something that we are really grateful for and very encouraged by. And that would contribute to the overall resilience of both Singapore and the larger economy.
Like on a personal front as well, I think all of their comments really resonate. Through the last few months, we've connected with a lot of our Economist Corporate Network members, and they've been very willing to share their experiences so that I can learn how the trends are moving within those companies and across sectors. That's allowed me to also share that with other members. So this collaboration in Singapore across different types of organizations definitely resonates with me personally. And with that, I'd like to bring our broadcast to a close. Do keep in touch with us. We'll be coming up with more programs online. So do keep tuned, and we'll see you then. Thank you.